AIM's one of 4 core markets in London, in the London Stock Exchange, and as a market in itself, it's got a very, very unique approach to attracting companies and indeed providing a platform for companies for future growth. The market is unique in the respect that it's the only one in London that's actually regulated by the London Stock Exchange, and indeed the LSE has conferred special rights to a group of investment banks and professional services firms called nominated advisors, who actually take out the responsibility of regulating the markets, bringing companies to list in the markets, and also being responsible for those companies in terms of their ongoing compliances as publicly quoted companies. This is a very unique model which has created AIM to become the most successful growth companies market, not just in Europe but across the world. Now, I think one of the main reasons why AIM has seen continued growth and success over and above those markets has been London's ability to attract international investors, which in turn naturally attracts international companies. And we've been able to do that because of a critical mass of expertise here in London from the professional services community, from investment bankers, and the general culture of London, which tends to understand and therefore appropriately value international equity stories. So this is the reason why we continually appeal to companies from different geographies who need access to capital in a publicly quoted environment that's stable and robust and provides them the opportunity for more opportunities to grow. I think the main reason why they come to London is based purely on economics. It's demand and supply. It's supply of well-run, well-managed Indian businesses with great growth potential, and demand here in the UK and in particular Europe, having access to companies that have significantly greater growth potentials than companies that are in local jurisdictions. And I think that has been the very, very simplistic reason why companies have come. Now, even more so in the case of India, AIM seems to have aligned itself more so with basic Indian business culture. There is a tendency amongst many, many Indian companies to retain a higher proportion of ownership within the business, and our rules and regulations seem to align themselves more so with that fundamental requirement of Indian businesses, and this has been another one of the single reasons for additional attraction. But all in all, everything is there. The market offers significantly greater profile for Indian companies outside of their local market. This has been a key reason, and offers significant liquidity opportunities. At the moment, the AIM market has, in technical terms, a much higher velocity of turnover, particularly in smaller cap stocks than the Indian market. And this is very attractive and a very attractive proposition for Indian business owners, and particularly those companies whose businesses are internationally focused. You talked about liquidity. Liquidity in those particular sectors come from the fact that we have possibly the widest range of investor types in London, from institutional participation, which is now at around about 50%. But we also have direct retail participation, and as the UK and Europe is more inclined to, we also have managed retail participation. So I think the liquidity opportunities remain there for companies. It's also, to a certain extent, trying to help educate companies in themselves. The tendency for a lot of businesses is to keep a very close-knit number of cornerstone investors, perhaps 6 or 7 people that are going to be supporting your equity story. That doesn't necessarily help in terms of intraday liquidity requirements. So our market tends to not only support a wide range of sectors, but a wide range of investors who have interest in shorter term holdings, for example. And that helps significantly in the overall development of a company.